From the floor of the CME Group, this is Danny Riley on this last trading day of March 31st. Plain and simple. It's very quiet down here, and it's a holiday week. You've got the Passover holiday, you've got Good Friday, you've got spring break, and you know the markets are on a high here, and people are just confused as to what to do. What we're leaning toward is some type of sell-off going into the latter parts of the day. The call for the day for the equity report was that we thought that based on the way the December quarter end closed out, we were down 11 handles on that last day in December. And if you match these days up, they don't really look a lot alike, but there is generally some profit taking that occurs on the last day of a quarter. Thus, we have what we call the walk-away trade. Now, this would have worked a lot better if the market had been higher this morning, but we came in a little lower, and then we got then we sold off real quick when the Chicago PMI number came in lower than expected. As far as what's going on the trading floor here right now, from the 5-year notes all the way over to the Euro-dollar options, it's quiet. When we were looking over into the grains are having a big day. There was a report came out that was negative grains, and the front month beans opened down 20. Corn and wheat were also down too. Then at 9:30 we also had the API number that showed a build of 2.9 million barrels. Crude initially upticked again and then sold off. All right, so here we are now in the S&P. What we think is going to happen here is as the day wears on, more and more people are going to leave the pit. We started out with about 100 locals in the pit. Right now we're down to about 40. Maybe some of those locals will come back later in the parts of the day because of the walkaway trade, but really volumes are so low here, we really don't know what to expect. Now, what we're going to do is we're going to go tomorrow. Tomorrow is seasonally a very good day, and then Monday, and then we have Friday, which is sometimes a very volatile day, both kind of mixed up and down, and then Monday is a very bad day. And that coincides with Mutual Fund Monday, which has been up by, 21 out of the last 25 occasions. You know, there's a bunch of different news out there this morning. Obama's talking about drilling off the coast of Virginia, which, to tell you the truth, a lot of people in the U.S. have been wondering why we haven't been doing that all along. And I know that there's a moratorium on drilling in different parts of the United States, but you know what? If there's big crude reserves off the shores of the United States, we should be going after that crude. I know it's against, the ecological side of that, but you know what? With crude prices where they're at right now, they don't seem to be going down. In fact, Jason Carter and I were just talking about it. There's a lot of buy stops, and the crude above the 83 to 85, maybe up to 86, and really most of what we're looking at looks like crude's going up into those prices. For the remainder of the day, you know what? We're on holiday mode here. Again, we think that most people will be walking out of here early. We still think there'll be a little bit of walkaway trade, but right now we only have 4,500 S&Ps traded in the big, and we've got 872 minis traded. I know I'm not supposed to, when I turn, I'm supposed to talk into my mic. But when you take out the 180,000, that brings that down to about 600,000 minis. That's pitiful for what we usually see on a normal day here. You know, we'd like to give you more, but there's just not enough to talk about. We're going into the holiday, and we'll leave it like that. Happy Easter. We'll see you next week.